Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Kayla Selhorst, the Chief Operating Officer of CME Credit Union. It's a really interesting conversation. We dive into Kayla's thoughts around what she calls predictive lending, which I thought was a really interesting term. We discuss their centralization of consumer and mortgage lending operations that's allowed them to really better serve their customers and increase their throughput, which I thought was really fascinating. And I asked her what she would do with a much bigger budget, and she told me she would build some things that today she has to buy from third parties. So I thought that was an interesting answer, and what she thinks would be the first things to build. Well, I'll leave that to the episode. So please enjoy my conversation with Kayla.
Kayla, thanks for joining us on the podcast today. I really appreciate you making the time.
Yeah, Jeff, thank you for having me. I really appreciate it.
Yeah, so I've started about halfway through asking all my guests the same first question, which roughly goes, none of us, at least not many people that I've talked to, grew up dreaming of being in the banking industry or being bankers, and yet here we all are. Tell me a little bit about your path to this place and kind of what brought you here.
Yeah, I absolutely did not want to be a banker growing up. Never thought I would in the industry. So I became a teller at pretty young age and thought, well, I can count cash. I'll do this for a little bit. I wanted to be a flight attendant and travel the world and have a little fun. So I ended up staying behind a teller line for a while and I've actually worked in banking and credit unions. So I like to say I've converted to the credit union life the last 12 years. And here I always hear I came from the dark side. So I absolutely love it. I think helping people is a blast and we get to get creative and find ways to get things done for people. So it's not as boring as I thought.
Not as boring as it. I will say the two things that have surprised me coming from the technology industry are it is not boring. That's true. And how consumer and mission oriented there's the investment banker world that I think people have their perspective of the Wolf of Wall Street traders and whatever. But most people in the banking industry are really focused on helping consumers with the products that they need. And we all need financial products in our lives. And so it's always been a refreshing thing that people are really focused on that in a way that I had not appreciated or understood from as an outsider.
Yeah, absolutely. And I love to find solutions for people. And I think this industry, you get to do that every day. So,
well, let's talk about how you're finding better ways to find solutions for people. You were talking to me earlier about centralizing consumer and mortgage lending operations. And that was a fascinating statement that you made to me, because so often I see the experiences in a bank or credit union kind of divided among product lines, and it's like they're all their own separate things, and it's like the teams don't talk, and it's the consumer, the member, ends up having an experience dictated more by that organizational structure than by what they need. And so your statement that you were centralizing that really struck to me as really interesting. So tell me a little bit about what that means and why that was something you wanted to do.
yeah, so we have always relied on our branch network, and historically, that's where a member would go for loans or new accounts. And obviously, as technology grows and people expect answers now, and for us to be more efficient and fast, we found that that was not the best way to do things, because we would have a loan officer that would have to go from an NSF conversation to a mortgage conversation to an auto conversation, or help someone balance their checkbook. So those salespeople could not really focus on sales. So for us, centralizing that function, we went from 12 people offering loans down to 4, and we were able to double our loan production because those loan officers could only focus on, building that relationship with Jeff, finding out what he needs in the future, what does he need right now, and then partnering with the branches. We still have branches, of course, and we have loan centers in each of our branches where they can put the members on the phone directly with the loan officers. So we found that it helps the majority of consumers and our members. They want to do things via email, text, phone. They don't want to come in. Now, we still have handful of members that love to come in and sign, and we obviously offer that for them. But we've also found ways to do e-notary. So if someone doesn't want to come in for an auto loan, we can just get on the phone and e-notarize that as well for them. So we've also seen increase in non-interest income, because again, those loan officers get to know just those products versus having to know a checking account and a money market and all of those operational things.
I'd love to dive into what exactly you kind of cut out or centralized, or what that means, because the idea of fewer loan officers and more loans, I feel like everybody in the business would go, I want me a little bit of however I get to, fewer officers, more loans. So what is it that they're not doing? And what is it how have you simplified their lives to make it possible for a smaller number of people to end up doing more business for you? That's a pretty big win.
Yeah, so we have essentially taken all the processing from them. So I consider that data entry. So they're going to get on the phone with our member. They're going to find out what the need is, what are they looking for, make sure they find the right product, focus on cross sell, talk about ancillary products. Once that conversation's happened, they have a partner in processing that's going to take that loan, do all of the paper, make sure the I's are dotted, T's are crossed, and then get back on the phone for closing, hopefully have some relationship building so they can follow up. So it just helps them hyper focus. So they are having more time to have those sales conversations are on. Hey, I don't have your driver's license number in here correctly. We're going to have a processor reach out about that. And then the branches, we've really focused on partnering them with loan officers for referrals because we still need the referrals from the branches. There are still people that physically walk into those branches, but our members definitely are doing more via email, text. I mean, DocuSign's huge for us. We don't, we do everything from a room.
That's remarkable. As you shifted to some of that outsource of processing to a different person, have you automated or digitized or changed how that processing works, or is that mostly just kind of separation of roles between the kind of product expert who's working with the client to understand them and the more process oriented back office? Is it kind of the same process and just different people in a real separation, or are you digitizing / automating any parts of that?
I would love to automate it and digitize it. We have not. It is actually a separation of roles today. So we have people that are processors, but that's definitely an area I think for us to take that to the next level could help. I mean, you talk about like bots and stuff like that. I mean, if we could not have a human touching it, so we're having two humans touch it, that would even make us more efficient for sure.
Well, that's what we can talk about in the future. You did mention people coming into branches. How do you see branches playing into the future for this? Like, what role does that play, and what's the experience you think a member wants in the branch, or that you want to provide in the branch versus what you provide over email? I'm sure part of centralization is like, if not a loan officer in every branch, which means I can't do that work in person. So how do you think about the role of the branch in that kind of a context as we move forward?
Yeah, so a couple of things at play there. Obviously, we're competing against not only other credit unions and banks, but non-traditional providers as well. So insurance companies have banks now. Carvana, Vroom, Upstart, Upgrade, all of those players, we have to also compete with. So we building branches is not the way to do that. Brick and mortar. But I still believe consumers want to be able to come in and talk to someone if they have an issue or they don't understand something. So I think that's where the branches play a role, is more of that consultative. I'm here to help you through a problem and then connect you with an expert within the credit union, whether they're in there or not, to help you with your next purchase or problem.
Interesting. So they end up more as like a guide to navigate the offerings and the people, but not necessarily the expert on everything.
Yes, absolutely.
Fascinating. And how do you see the transactional nature of the branch shifting? I mean, so much of what branches traditionally been like, I come in to get money, I come in to deposit a check, or it's not really a consultative advisory experience. It's like I have a thing to do, I want to get it done. Is that changing, shifting? And if it is, how do you think about keeping your staff up to date and educated? It changes the role of the staff in branch and the needs for training or the skill sets that you want. I'm curious how you think about what that really shifts for them, and how you prepare your staff for a slightly different role in those locations.
Yeah, that's a great question, and absolutely something that we're talking about, we're struggling with. I mean, you hire